Finally, we are getting to the good parts. This is the start of the technical analysis basic section. In this lesson, what is support and resistance? The learning objectives are: you should know how support and resistance levels form, and you should know what makes a support or resistance level strong. Support and resistance is one of the most widely used concepts when trading. They are important points in time where the forces of supply and demand meet. Let's look at this example. As you can see, the price moved up, and when it pulls back down, the highest point reached before it pulled back is now resistance. Resistance levels indicate where there will be a surplus of sellers. So you would expect there to be a lot of price movement in this level, but here we've oversimplified it, and it's just a smooth line. When the price moves back up after it pulls back from the resistance, and it starts to go back up again, the lowest point reached before it went back up is now support. Support levels indicate where there will be a surplus of buyers. The reverse is true during a downtrend. Resistance and support are continually formed as the price moves up and down over time. They could be, like in the previous example, trending upwards, or they can be ranging, retesting the same resistance over and over again, and the same support over and over again. When price passes through a resistance level, that resistance level could potentially become a support level, like you can see in this example. One thing to remember is that support and resistance levels are not exact numbers. This is the perfect example, because oftentimes you will see a support or resistance level that appears broken, but soon after you'll find out that the market was just testing it. This is one example. You can see the wick goes past it. Here it even closes below our supposed support level. With candlestick charts, these tests of support and resistance are usually represented by the candlestick wicks or shadows, here and here. To help you filter out these false breakouts, you should think of support and resistance more of as zones rather than concrete numbers. The most reliable source for identifying support and resistance zones is historical prices, making them invaluable to traders. The key is to familiarize yourself with past patterns so you can recognize them if they appear again. However, it is important to remember that past patterns may have formed under different circumstances, so they are not always a reliable indicator. You should plot support and resistance zones on a line chart rather than a candlestick chart. Candlesticks show the extreme highs and lows. These highs and lows can be misleading. You should plot your support and resistance zones around areas where you can see the price forming several peaks or valleys. I wanted to make a small point about this chart. You see, it bounces off the resistance 3 times and then the support 3 times. But there's a key difference here with this last one. You see, it doesn't touch the support again. And often what happens with the price, if it doesn't touch the support again and then immediately almost tests the resistance level again, you're almost certain that it's going to go straight through the resistance. Just bear this in mind. It's a small point and we'll come back to it in a future lesson. The more often price tests a level of resistance or support without breaking it, the stronger the area or resistance of support is. When a support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken support or resistance has been holding.